Hey guys, Jessica here. So I wanted to talk today about getting started on your personal finance journey. That very first thing that you should be doing, and that is start building credit. So credit comes first. It comes before investing, before savings, even before paying down debt. So no matter where you are in life, if you're in college or if you're a few years out, if you're sitting down and saying, hey, I'm gonna figure out my finances, I'm gonna get on top of this stuff, then the first thing that you need to make sure you're doing is that you feel in control of your credit. In this video, I'll talk about exactly how to do that, so stay tuned. So the first thing, before getting into the how, is why is credit so important? Basically, credit gives you optionality. Whether or not you use credit, having that optionality is really, really valuable. Let me explain. So what credit is? Credit is basically your ability to borrow money. Companies usually look at credit scores to determine whether or not to lend money to you and at what terms. So it could impact your ability to get a credit card, to get a mortgage, to get a student loan. And credit scores are calculated between 300 and 850, with scores 800 and above generally considered perfect credit. Now, you might be saying, hey, I don't plan to borrow money anytime soon. Credit scores can come into play even in many, many other aspects of your life. So for example, if you wanted to go and rent an apartment, your landlord could take a look at your credit score, do a credit check on you to decide basically whether or not to rent to you. In the same way, this can come up when you are getting a cell phone plan, when you're buying insurance, when you're renting a car, all these kinds of things. Basically, credit impacts a huge chunk of things that are normally considered to be day-to-day life. Not to mention, there's a ton of free money sitting in credit card rewards. And normally the highest credit card reward cards go to the people with the highest credit. But beyond that, I actually mentioned that optionality is the biggest reason, because credit is actually insurance. So what I mean by that, having good credit can give you access to funds whenever and if ever you need it. That whenever and if ever is super key, because you can't predict the future. You don't know if, hey, you might break your leg and need to go to the hospital, or even on the flip side of this, hey, you get that killer job, but it's in Los Angeles and you need the funds in order to move there. Having good credit gives you that capability to borrow funds if you ever need it. And hopefully you'll never need it. That's why it's insurance. But on top of all the other benefits that I was talking about earlier, it's really good to know that this insurance is there too. So hopefully I've now convinced you that credit comes first. And the next question should be, well, how do you get that perfect 800 credit score? Credit scores are made up of 5 key things. I'm going to comment here on the top 3 things, which are the most important things to get started. The first one, and most important one, is payment history, which basically means you have to pay on time. On time is super key. If you just miss one payment, if you're forgot and 2 days late, that could impact your ability to get a perfect credit score for years. The next one is credit use, which is basically a calculation of how much you've borrowed divided by how much banks are willing to lend to you. And so basically, if you were to get a credit card and there's this thing on the credit card, it says your credit limit. This is the max, that you could put on the card. That goes in the denominator. That's how much banks are willing to lend to you. And then the actual amount that you charge to the card, that goes in the numerator. So the amount that you charge on the card divided by the credit limit, that's your credit use. And you want this number to be as low as possible, but greater than 0. I know it's a little bit weird, but they actually want you to see that you're using a little bit of credit, but not too much. And so you, ideally speaking, want to keep this number below 30%, or even less than 10%. That would be even better, but greater than 0. The third thing is length of history, which is one of those things that unfortunately can't be hacked. It's just a matter of time. But basically, banks and companies want to see that you've been managing credit well for a long period of time. And this is one of the other reasons why it's really important for this to be the first thing that you do with your personal finances, because it actually is going to take some time to build up good credit. And there's no better day to start than today. So you're probably saying, all that is great, but what are you actually supposed to do? There are a few ways to go about this, but basically you have to go and get some credit and you have to manage it well. So breaking that down, if you're in college, go and get a student credit card. We recommend the Discover It Student Cashback Card. If you've already graduated, go and get a secured credit card. We recommend the Discover It Secured Card. That's a really good one. Also, either way, if you're in school or if you've already graduated, check out this company called Kickoff. It's a startup that basically helps you build credit. It provides a free credit building loan. So definitely check that out. And also, if you have a student loan, make sure to make those payments on time, because that is also building up your credit at the same time. Whatever you do, pay on time and in full. And don't go overboard on the spend. Start small. Make sure that you have this process down pat. Make sure that the credit card is connected to your checking account and that the payments are going through correctly. Then, once you have a handle of that, you want to slowly layer on top of that. So wait 6 months to a year and then get a second credit card. And the reason you want to do this is because of that credit use part of the credit score equation. So you remember the credit use was the amount that you borrow divided by the total amount that banks are willing to lend you. And if you add a second credit card, that comes with its own credit limit, its own credit line, which then added to the denominator, as long as you keep your spend the same, will bring that ratio down and will be good for your credit score. And if you do all of this, a few years later, boom. And that's it. If you want us to take a look at your specific situation, which credit card to get, how to manage it, sign up on our website below. I've linked to it in the description. We are a startup on a mission to take the personalized tax and financial optimization strategies of the rich and make it completely free. Other than that, if you got value out of this video, please hit the like button and subscribe for more optimizations. Thanks.